Welcome to the Adjusted for Risk podcast. Join myself, Ryan Nauman, as I talk markets, investments, economics, and life as I help prepare you for the upcoming weekend markets. I work for Zephyr, and all opinions expressed by myself and my podcast guests are solely of their own opinions and do not reflect the opinion of Zephyr or Informa, its parent company. This podcast is for informational purposes only and should not be relied on for investment decisions. Welcome, everyone, to Zephyr's Adjusted for Risk podcast. We are recording on location at the fabulous Wealth Management Edge conference that has brought a bunch of energy, great content, and has brought me together with our next great guest. And, there has been a big shift taking place in wealth management space over the years, and it involves the next gen financial advisor and how they are evolving, and the way they run a business and service clients has really kind of changed the wealth management space, I feel. Well, I have on the perfect guest to talk about these trends and what that all means for the space into the future. But first, this episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. I'd like to give a warm welcome to Nate Lenz, co-founder and CEO of Concurrent. Nate, thank you so much for coming on. It's an honor to have you on the podcast. Thank you. Really looking forward to the show. Could you tell us a little bit more about yourself and Concurrent?
No, absolutely, Ryan, and I'm excited to be here as well. A lot of energy here at the conference, so it's always fun to get on location and to have some discussions like this. So, happy to give you a little bit of my background, and it's timely that we're talking about next-gen advisors. Based on my age, I'm 36. I typically get to wear the millennial hat in most conversations. And it's exciting. The panel that I've got tomorrow is on the RIA of the future. So it's always fun to start to think about, not just the next 12 or 24 months, but 5, 10, 15 years in the future, and how the space will evolve, and how we as an organization will rise up to meet it. Just quick background. So got my start in the business on the practice management, business consulting, M&A side of the house. Ultimately ran the succession and acquisitions team at Raymond James, and was responsible for their independent broker-dealer as well as their RIA custody channel. And a lot of that experience and really working with advisors through M&A opportunities, through catastrophic and long-term succession planning, even down to how they're running and operating their business, was very formative in my career. And I think, really laid the foundation for a lot of what we do at Concurrent today. In 2016, started a consulting business.
Okay.
I think I get the question all the time of, what made you, think of Concurrent and how did it get started? And I wish it was that linear, like it was a great idea that, was in my head back then, and it worked out perfectly. I kind of love that, the entrepreneur's journey, right? Yeah. Where you've got like the expectation versus reality. Expectation is this nice straight line upward. Reality is you go up for a little bit and you fall off a cliff, and then you swim across shark-infested waters and you climb some more and fall off again. But I'd say that's a very accurate depiction of my experience as an entrepreneur. But started a consulting business in 2016, was working primarily with firms that were on the buy side, looking to grow through experienced advisor recruiting and acquisition. And what we recognized, about 6 months into that endeavor, is that a lot of our clients, while they had some critical mass, most of them were between 300 million and 750 in assets, for them to really invest in all of the infrastructure they would need to be successful at scaling those businesses, it would have been cost prohibitive. Okay. And so we ended up bringing a group of our clients together at the Atlanta Airport Marriott Hotel. Flew them in, presented this idea called the superstructure, which is, maintain your independence and autonomy. Let's jointly invest in a shared infrastructure. Let's scale the scalable. And that kind of independence, but without isolation, collaboration mindset, I think really, again, laid the foundation of what Concurrent would later become.
That's fantastic. I love the story, and throwing in the Atlanta airport hotel. That's fantastic. Was there a boardroom there? Like
there was.
A real
There was.
boardroom?
It was. The boardroom was too small for the amount of people we had in the room. We also had a Bluetooth like JBL speaker sitting in the middle of the table for a couple of teams that were dialed in remotely. So it was not glorious.
Yeah, but I love those stories of where it started and now where it's going. You guys are doing some fantastic things for the next gen. And speaking of millennial, it's interesting, you're so motivated and driven with Concurrent and all these other next-gen financial advisors. You really go away with that misconception of millennials wanting naps and just living off mom and dad. So good job.
Thank you. I'm trying to change the mindset, right? But
I
no.
love it. So you mentioned you're going to be in a panel, RIA of the Future panel. Can you, without giving away too much of the story, maybe just give us a little glimpse into your discussion?
We built the business as an OSJ on the Raymond James platform.
Okay.
So that's where it got its start. In 2022, we launched the RIA and went fully independent. And so, and today we've got about 130 advisors around the country, just over 12 billion of assets under management. We've got another 14 billion of assets under advisement in our corporate retirement plan business. So about 26 billion total in assets under management and advisement. And we operate as a platform, right? Okay. So the way that we position ourselves to the market is we're a platform for and strategic investor in independent wealth firms. So if you look at our website, it looks a little bit like a NASCAR jacket. We're believers in independence. We believe in the, have a mindset of advisor centricity, right? Which is that, clients are going to gravitate towards advisors because they're like-minded, they share their core values, they're best equipped to serve their niche. So a lot of what we've built in our, value proposition is really designed to put that on a pedestal, right? We don't want to turn entrepreneurs into employees. We don't want to disintermediate the advisor from their client. We want to let their true self shine. And so when we talk about things like marketing and branding, all of our support offering is really built to highlight their key strengths and to help them stand out and differentiate themselves for the target client demographic that they serve, but be able to tap into our pricing power and service power to do so. So with that backdrop, I think there's a kind of a spectrum of different affiliation options and models out there. I know, we saw the session earlier, the game show with Joe Duran and Michael Kitces, and, they were, debating, right, what PE has done in the space and the impact that it's had. And, I do think when you look at that spectrum of options, we definitely fall on the more independent side of that spectrum. But with that, I think it's allowed us to attract advisors that are in growth mode, right, tend to skew younger than industry average, that are looking to build something greater than just a practice. They're looking to build an enterprise and want to tap us to do so. So as we're supporting those advisors, and to give you a glimpse into tomorrow's session and some of the things we're focused on, over the next, call it 5 to 15 years, at a high level, it's, 1A and 1B is how are we developing and attracting talent? Right? That's going to be critical to the long-term sustainability of our business. I think, 2, we're really focused on building out our data infrastructure. Okay. 1, because it'll allow us in the short term to tighten the integrations between our systems to help our advisors be more operationally efficient, right, to be able to serve more clients. But over the long term, also having ownership of that data will allow it to be actionable. And so as we start to lay on some of these evolving technologies, specifically around AI, having that in one source of truth, one central location, will make it possible to be able to really leverage some of those tools to the fullest extent. So it's exciting, right? A lot of it's about how do we build efficiencies, how do we build talent, because we're going to have to expand the scope of services we provide. We're going to have to serve more clients, right, than we do today with the rising demand of advice. And so we need to be thinking about those things as we approach the future.
Nate, that's fantastic. I'm really glad you brought up people, right, and technology and efficiencies. I feel as if those are two things that years ago when I started, 20 years ago, were considered kind of like an expense. Yeah. Right? And now, people like you, firms like you, you're thinking of that as an investment, right? An investment in people, investment in technology to create efficiencies.
Absolutely. And I would say, kind of putting my practice management hat back on, one of the things I saw years ago, right, especially with what I'll call boutique independent firms, where you've got kind of a sole practitioner or small team, right? I think one of the issues that our industry has faced over the last 10 years is a colossal lack of patience, right? And so, and if you think about it, right, if I'm a sole practitioner advisor and I'm operating a book of business, right, for me to go hire that G2 advisor, right, that's coming directly out of my pocket.
Yeah.
And so it does take investment of time, investment of dollars, and look, there's risk involved, right?
Yeah.
Because what if that person doesn't work out? What if that person gets ingrained into your business, ultimately leaves and takes clients, right? So it's not for the faint of heart by any means, but I do think as teams, and the feedback that I always give teams is really be intentional, right? There's a market for these businesses, right? If you want to go sell it, you can do that. But if you're truly focused on, what's in the best interest of your clients, and you feel that by developing talent internally to be able to maintain the level of service they're accustomed to is the best path, it's going to take investment and forethought well ahead of your potential exit.
That's fantastic. Do you think that's one of the challenges financial advisors face is, you mentioned, hiring the right person, and there's a risk. Do you think that's one of the biggest challenges?
Yeah, I think it's hard. I mean, look, we've gone through fits and starts. We have 65 home office employees within Concurrent that support the 130 or so advisors in the field. And, again, we've had struggles with finding talent, right? And interviewing the right way. And, I'm a big believer of you want to be slow to hire and quick to fire, but you don't always get it right.
Yeah.
Degree of risk when you've got an advisor introducing this individual to their end clients, right? And starting to, and it's such an apprenticeship business as well. So you almost have to, but at the end of the day, you've got to make sure that you've got, I think, the right plan in place to develop them. You've got milestones set that they need to achieve before you give additional responsibility. I think you've got to give great visibility around career pathing. And so it's like I said, it's not for the faint of heart, and definitely there's quite a bit involved in putting together a great plan. But I think the firms that do it are able to build a business that's sustainable and transferable, which are the key drivers of value.
Yeah, you're exactly correct. I'm glad you talked about being sustainable. Right? It feels as if I've heard that term a lot, building a self-sustainable practice.
The firms that we've seen that have grown the fastest on our platform are the ones that are focused on a very specific niche. So whether it's divorcees or business owners, and they're able to position themselves as an expert in that field.
Okay.
We're also seeing firms that have a lot of success in service expansion, right? So if they're aligning with a tax practice, right, or if they're able to provide some advanced planning support, all of those things help further build a moat around the client and leads to relationships with the next generation, which again goes back to sustainability over the long term. So at an individual practice level, I played college football, and one of my coaches used to always quote John Wooden with it's not difficult, it's hard.
Yep.
At the end of the day, I think for an individual practice to go out and grow, it's not difficult, it's not rocket science, but it's hard. It takes effort, right? And it takes focus and it takes intentionality. But doing the tried and true things of, being process oriented, segmenting the business, asking for referrals, right? And I think specifically what we're seeing is that service expansion and, moving deeper into individual niches. That's where we're seeing the fastest growth at that level. At the enterprise level, right? It's kind of the holy grail. If you can put leads on advisors' desks, right? That's a phenomenal value proposition. And so we are working on it. One of the things that we did, so we've got in our corporate retirement plan business across those 14 billion or so of assets, it's about 450 plan sponsors and about 180,000 underlying participants. So one of the ways that we've been working to develop talent internally, we built out what we call our centralized wealth advisory services team. It's a team of associate advisors that are employees of Concurrent, but really what we're leveraging them to do is go and provide financial planning and financial wellness to those underlying plan participants.
Okay.
And what we found as well is to be effective in going into those plans, you've got to be able to demonstrate to the plan sponsor that you can serve their entire workforce, right?
Yep.
Even though it might not be the ideal client for one of our long tenured advisors, we've got to be able to demonstrate that we can serve the entire workforce. So the way we've done it is we're leveraging technology, right? We partnered with a technology called Tiffin at Work that ties into the the benefits and the payroll systems of those employers. It pulls in that data and information. It leverages AI to take the participant through what they call micro-planning journeys. Do you have enough emergency savings? Have you thought about funding a Roth? And we're there as a reactive resource to also support those clients. If they have questions on their allocations within their plan or a rollover opportunity, that's where our team is able to serve those individuals in spite of the fact that they might not be ideal clients for some of our folks in the field. But in doing so, you get to the level 2 and level 3 participants within those plans. Those present great opportunities for our centralized wealth advisory services team to cut their teeth, right, to go through full planning processes. And so we look at that as a point of strategic importance for us in a path to developing talent. And in doing so, right, as we're also able to work with the C-suites and the executives, that's where we're able to then bring leads to our advisors in the field.
I'm really glad you brought that up, Nate, because that's how we started my industry. I worked for a group of a team. We're advisors to plan sponsors.
Yeah. Yep.
And this, like I said, aging myself here, Nate, 20 years ago, our big advantage, value prop was education. And I would go up to these, groups of people and just do education.
Yep.
I mean, what is a 401k? Why? And it's amazing how much value they get out of that.
Absolutely. Well, when you think about that next generation of clients, right, like we talked about earlier, I mean, that's what, I'll speak from the millennial perspective, right? That's what we need, is we need education. A lot of, folks that are in my demographic are in accumulation mode, right? They may not have a ton of investable assets today, but they have some complex planning needs, right? We've got 3 kids. We've got a 9-year-old, a 3-year-old, and an 18-month-old. But things like college savings and retirement savings, I think, are all critically important. And so I do think that the financial planning and that education is a huge need. And, I think that by being able to bring that to those 180,000 participants that we serve, not only poses a great training opportunity for us over the long run, but we're providing a phenomenal service to the folks that I think need it the most.
You're spot on, because, I just did some research in Zephyr about the retirement crisis that we have in America.
Yep.
And it's amazing how many people have access to a 401k but don't leverage it.
Yep.
They don't use it. So Concurrent, going out there, educating, getting people to contribute. Why is it important? Might not really help a lot now, the perfect client, but give it 10, 15 years.
Absolutely.
Patience.
Absolutely. Patience is key. It's actually interesting. I heard a presentation earlier, and it was talking about the client. It was looking at demographics, right? And I think there's a lot of attention paid to the generational wealth transfer, right? Of it going from boomers to Gen X and so forth. And when you actually look at the statistics, if your time horizon's 5 to 10 years, at the end of the day, millennials don't really matter, right?
Yeah, exactly.
That's it doesn't matter. But if your time horizon is 20 years, all of a sudden millennials and Gen Z matter a whole lot. And so it's interesting to see what and how they're engaging, right, with our industry now, and using things like Stash and Acorns and these apps that gamify the experience of investing, but also the experience of saving. In a lot of ways, those Robinhood, right, and the Trade PMR acquisition is really interesting, because at the end of the day, they're starting to capture those clients of the future, right? Yeah. That so it'll be interesting to see how our industry is able to potentially convert those clients, or what other combinations of firms are created as a result of that, because they are building a large captive audience.
And you're right. I hate to put people in demographic, but the older generation of advisors, they're not going to have the patience to deal with, the Reddits, advisors, those real retail advisors. So that's a great opportunity, I'm assuming, for you guys.
Absolutely. And I think there's from our perspective, though, we're very much rooted in financial planning. So I think that it's, while I think it's great that you've got people taking an interest in the gamification of investing, where we really spend our time and attention, even at the, what I'll call that Henry client, the high earner, not rich yet, acronym. It's still very much a planning first focus, we're able to deliver a high degree of value and kind of get their house in order before they accumulate assets.
And that's where the patient comes in, because financial planning, it's a process. It's not a race. It's not a sprint. It's a long-term process.
Exactly.
So let's talk about technology real quick.
Yeah.
I think the older generation advisors, they use technology. They're probably slow to adapt. Next gen advisors, they probably really use it and really benefit from it. How are next gen advisors leveraging technology?
Yeah, I mean, in our organization, 2022, we had to build a technology stack from scratch, right? Which presented a challenge, but it also presented an opportunity. So we were able to go out and get really, what we would consider best in breed components, right? That could enhance the client experience and enhance advisor efficiency. What I'm seeing in terms of next gen advisors relative to, I'll call it older advisors, right, that have been in I think the willingness to embrace things like AI, right, and even simple things like AI note-taking and how that integrates now with our CRM system and how it can make recommendations around upcoming review meetings, right, of things to talk about. I think you're seeing large efficiency gains there, and we're barely scratching the surface. So I think, adoption of that obviously is much higher, in those younger demographics. But I do think across the board, I think, COVID did a lot to, I think push forward the adoption of technology. And I think a lot of advisors that are even nearing retirement as a result of it, as a result of remote work and leveraging things like virtual meetings and, being able to interact with clients, leveraging client vaults and timelines and things like that, we've really seen an uptick since then. So it's an interesting 1-2 combination where you've got this increase in technology adoption, but also paired with an increase in demand for face-to-face advice.
Fantastic. And that tech stack, and you mentioned AI, note-taking, it seems like those baby steps, right? Also, you're not going in and using AI to create optimized portfolios or anything like that. It's just a baby step that starts a process. Exactly.
But I do think there's a tremendous amount of potential, right, to use it across, whether it's within the investment process, within the planning process. We are using some of the AI tools around reading estate planning documents and tax returns and things of that nature. So I do think it's, you'll continue to see those evolve and advance and see them be more tightly integrated with the core systems, right, our reporting systems, our CRM systems, to make it more of a seamless experience for the advisor. And I think that's where you'll see the real uptick in adoption.
Yeah. Lastly, let's bring out the crystal ball.
Okay.
What's the future of financial advice look like?
I do think
Concurrent leading the world.
That's, ideally, right? We think it's kind of interesting. You see the RIA space and we talked about growth being really heavily driven by M&A, right, in the space. And with that, I think you've seen almost in some ways an assault on entrepreneurship, right? Where a lot of these firms are acquiring advisors, but as part of that, it's a full integration, right? It's put on the fatigue, salute the flag. And in some cases, that's not a bad thing, right? That can represent a step up in the client experience. And for the right advisors that are ready to step away from the business and want to hand it off, that's a way to, I'll call it, accelerate the sustainability and transferability. So by no means is that necessarily a bad thing for the industry, but from our perspective, we do think that our greatest opportunity for growth is, again, to be able to harness the entrepreneurial drive of the advisor, and to, allow them to continue to run and operate their business, but get the benefits of our pricing power, service power, scale. And so that's the space that we are looking to really play in. In terms of how advice looks to the end client, right? A lot of the things that we're now focused on are how are we bringing advanced planning resources, right? But where that might only have been available to, a 50 million plus client, how do we bring that down to the, 5 to 20, right? And then ultimately what elements of that can be leveraged for the 1 to 3, the mass affluent. And so service expansion, I think, will be a major theme. And I do think, a lot has been made of this generational wealth transfer. I think it's a horizontal wealth transfer first, right? It's going to go to the spouse. And so building relationships with the spouse, I think, will be a mission critical piece to retain clients, through that. So, so I think it'll be exciting though. But in doing that, we'll have to serve more clients, so we'll have to leverage technology to do it efficiently. But I do think the future is bright, and I don't think face-to-face advice is going anywhere anytime soon.
I completely, as much as AI is there, remember robo-advisors?
Yeah.
They were supposed to put
taking over the
advisors-
world. Yep.
Who talks about robo-advisors now? I guess we do. But I'm really glad you real quickly brought up spouses.
Yeah.
Everyone talks about generational wealth, and it's not mentioned enough that women are going to own the majority of financial assets here very soon. And you brought it up. It's imperative that financial advisors bring the spouse to the table.
Absolutely.
Because they invest differently than we do.
Exactly. Absolutely.
They invest more at their value. They don't care as much about returns, and they're in and out. They're don't have the patience that we were talking about, and so on. So that's imperative. I'm really glad you brought that up.
Absolutely.
Nate, fantastic conversation. Thank you so much for coming on. Really fun conversation. Love getting your insight as Gen X or whatever I am.
We'll make you an honorary millennial.
Yeah.
Your thinking is definitely along those lines.
My hair doesn't look like a
welcome you.
millennial.
So, would love to explore if there's any conversations to be had, or if anyone wants to just talk shop. This is the fun part.
Awesome, Nate. Thank you so much. Really fun conversation. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel, Spotify, and please be sure to like, subscribe, and follow us on LinkedIn. Thank you, and have a great rest of your week.
Let's get started.